All right, everybody. Stocks by the numbers. Welcome back. Quick update here. We have some news hit today on the Boeing Company, ticker symbol BA, listed here on the New York Stock Exchange. Stock today was actually up to a little over $151 a share, up a little less than 4.5 points, even 3% on the dot. After hours now, stock currently down about 2.5 points, 1.6%. Let's find out what's going on. First, the technicals. So here I noticed that we had the big run up, as you see, off this bottom bounce here about the tail end of 22 up to 240. Then we had a step down back up here. We ran up to these highs of 267, and for reasons unbeknownst to me, because the company this whole time was kind of struggling, and they were getting subpoenaed. You remember, you probably saw the videos on YouTube and whatnot about the congressmen and women kind of grilling the execs of Boeing. And people were saying you're kind of skimping on safety. You were ignoring what a lot of mechanics were telling you about your aircraft, and you basically just ignored everybody but gave yourself a raise. So it's funny how a lot of these situations work, right? Because we literally just spoke about this a few minutes ago in the Discord, and that's what prompted me to do this video. Because obviously we did have news, we'll get to in a second. But more importantly, I went back, I looked at the history of the Discord. And between like March and like May, when this news started to hit, I had myself and also a couple of other people in the Discord who were mentioning, yeah, Boeing puts, with some time, should be pretty much a layup, right? Based on what we were hearing, the whistleblowers coming out, then all of a sudden some shady shit taking place, right? I don't want to go down that road, but you guys understand what I'm saying. It seemed like puts were in play. And look at what the stock did. It initially had a pump up. Now, I understand, yeah, these earnings came out, they happened to beat, boom, the stock went up. But it's interesting, right? Because they were essentially in the crosshairs and everyone was hating on them. So if you try to understand the mentality of the average investor, they heard that news like we did, and these options are a little bit more expensive on Boeing. So the average investor probably, maybe if they could have, bought a month or two time, right? And we were sitting here, yeah, we were like 190 to 200. So, the average person here in April, May, hearing the news, may have stepped in and said, okay, I'll buy, July 170s or something, right? And then what happened? The company beats earnings, all that news is ignored, and the stock jumps up to 240. So this is why I say that trying to trade a situation can be very, very difficult. And something like Boeing, again, I know it's a little bit of a different story because it's a more expensive stock. So if you really did want to buy, kind of like a 10-15% sell off in the stock, but you wanted to buy like 3, 4, 6 months worth of time, you are going to pay a lot on a company like Boeing. So I understand if, a lot of you, smaller traders don't really have Boeing on your radar. So I can appreciate that. But again, you can understand kind of the point I'm trying to make, right? It's like the market knows that everyone's going to try to step in and buy short-term puts to try to catch the big drop after the news hit. But of course, the stock rallies upward, stays bullish, and then has a pop after earnings while the shit's hitting the fan, so to speak. And then what happens? Right after it pops on earnings, it completely drops down to 175, right? So the initial play was correct, but they had to kind of screw over short-term traders who could have made phenomenal returns, who, in my opinion, were justified in the moment, right? Because they had doors coming off and shit. So, of course, everyone's going to say, you know what, maybe I should buy some puts because the stock's probably going to tank because I'm hearing nothing but bad news. And then what happened? It goes up before it goes down. So this is why, again, the timing of trades can be very difficult. And as much as everyone wants to tell me, oh, just look for, head and shoulders patterns, look for descending wedges, when the RSI hits 30, buy, when it hits 70, sell. I appreciate the fact that a lot of the time it seems like those quote unquote rules come into play. But I feel like when it's a bigger, broader picture, they almost have to like throw a wrench into the machine, right? Like we all knew the move that was happening, but again, in the immediate short term, they tried to show you were wrong. So if you stepped in here and you were able to buy like 6 months worth of time, even if you initially saw this bump, you may have lost some conviction and some confidence in the trade. And you may have begun to, stop yourself out here maybe, or you just liquidated the position and said, you know what, I'll re-enter it. And then what happened? A couple of weeks later, all of a sudden, you were on the right track and the stock immediately gives it back and goes about 10% lower than where it was when you took the trade. Then, obviously, we have earnings come out again. Still reporting big losses here, missed on EPS by 2.5%, slightly beat revenue estimates of 18 billion. They came in with 18.1 billion. Stock shoots off the bottom 176 to new highs of 267.54. Now, granted, I appreciate the fact that they beat earnings, and it might have been a nice surprise, and everyone thought we were going to see a drop here, and we happened to beat and, obviously run up. But again, this is what I say is the dangers of just an inevitable climbing market. Because if you look when this happened, was the end of October last year. And what happened right after Halloween last year? The market started to rage and have not stopped since. So markets begin to rage for the last couple of months going into the new year, and this company that probably, in my opinion, didn't deserve a lot of attention and spotlight ended up going from the 160s, 170s up to almost 270. So again, a massive surge would have screwed over any shorter term put players that bought 3, 4, 5 months worth of time. Then we begin to obviously chunk down and drop down, and it looks like now you can see I connected the bottoms of this previous low here this time last year to those tops of 267 new highs, and I just drew those trend lines connecting the tops and the bottoms, and you can see now it looks like we're in this long-term descending wedge that essentially started basically since this time last year. So now, what the heck does this all mean? As a technical trader, I understand you could make the argument, well, we just hit this bottom fib level, the stock's been dropping, right? The RSI, I didn't even look, but it's probably low. So, you might be able to buy it here in the next day or two. And even if you catch a rally back up to this fib or the moving average, 157, 158, you can see a clean like 10-point move potentially on the stock. And if you have the capital to do so, in, out, boom, secure the trade. So any of you looking for that kind of trade, I can understand where you're coming from. I can appreciate that. But the news. Now we get to the news. Boeing apparently laying off roughly 17,000 workers, saying it isn't about the strike. In my opinion, I think it is. I think that it's not only about the strike, I think this is almost a GameStop move. And what I mean by that is that it's almost like the company can see that revenue may take a hit and they may start to lose any contracts or bids or anything like that over the next year or so. So it looks like, in my eyes, what they're trying to do is, even though they're expecting to miss on revenue, and now with the strike going on, costing them billions of dollars, now what they're trying to do is they're trying to improve the EPS and the profitability side to make it look like it's not as bad as it seems. So that's what I mean by comparing it to GameStop. Because if you recall, GameStop business kind of dwindling downward year over year, the company keeps reporting lower revenue. Lower revenue, missing those quarterly estimates. But what did they say? Oh, we're restructuring our cost. We're bringing the profitability side back up. Like, yeah, that's great, but the business itself is struggling. So it may still go down, right? So that's kind of the argument you can make here. But Boeing disclosed significant layoff and production decisions as it deals with the strike that has shut down output of some products, but the moves aren't about the labor dispute. There are tough choices made by a new CEO to prepare his company for what comes next. Quote, our business is in a difficult position, and it is hard to overstate the challenges we face together. Quote, beyond navigating our current environment, restoring our company requires tough decisions, and we will have to make structural changes to ensure we can stay competitive and deliver for our customers over the longer term. That includes laying off some 17,000 workers, or roughly 10% of the global workforce. These are not strike-related furloughs, according to the company. They are structural changes to reduce operating costs. So While this makes sense, of course, because we notice that the company is no longer profitable and hasn't been for quite some time and is reporting losses. Sometimes they beat, sometimes they report wider than expected losses. So overall, this is probably a move that had to take place. But the problem is, I think now that because they're under the microscope and they were being questioned and they had whistleblowers, and it seems like there's so many red flags, but the CEO got a raise. That's what I mean. It's like there's so many red flags and negativity attached to the company that now I feel like extreme measures have to be taken. And this is why it seems like, as we see, they're trying to improve their expenses to try to increase the EPS, knowing that the revenue is going to potentially be struggling, I'd say at least over the next 2 to 3 quarters. Quote, as we move through this process, we will maintain our steadfast focus on safety, quality, and delivering for our customers. That's some goal right there to say something like that. Quote, we know these decisions will cause difficulty for you, your families, and our team, and I sincerely wish we could avoid taking them. However, the state of our business and our future recovery require tough actions. The state of the business isn't great. Boeing hasn't reported a full-year profit since 2018. Beset by seemingly endless problems with its 737 MAX jet, Boeing's defense business has also performed poorly with fixed-price contracts, eroding profitability in an era of a higher-than-average inflation. That's why sometimes this is what analysts worry about as well. There's a perfect situation when a business locks into a contract, as you see here with these fixed-price contracts. Now the economy goes through a rough situation, inflation rates go through the roof. Now all of a sudden that great longer-term fixed-price contract that was signed in good faith, who knows, 2, 3, 5 years ago, at the time, looked phenomenal on paper. Now all of a sudden it's an issue. And now you have to play catch up with your profitability because of inflation. So obviously that, as it says here, is going to erode profitability. But again, I think the company just shot itself in the foot with a lot of this crap that's been coming to light right now. And I just think they're grasping at almost every option they could to increase profitability and to try to, stop the bleeding and make it seem like it's better than it is. Then there is the strike. Some 33,000 workers in the Pacific Northwest, represented by the International Association of Machinists and Aerospace Workers, walked off the job on September 13th after the expiration of their labor contract. They rejected an initial offer from the company that would have raised base wages by 25% over the life of the proposed 4-year deal. So it's sad because I know you see something like that and you're like, wow, 25% increase in wages. That's pretty nice. And realistically, it is. The problem is, though, I can probably bet that the wages haven't been increasing that much over the last several years, and these people are probably seriously suffering now and have basically lost, if any, of their excess dollar buying power from their wages. So now at 25% over the next 4 years, they may have crunched the numbers and said that's basically in line with the rise we've seen in inflation over the last 3 or 4 years. So now it may be at a point where, yes, we appreciate 25% bump in wages, but because they weren't increased concurrently with inflation over the last several years, we may need 35, 40% increased wages, 50% wages in order to, make this work for us and our family. So we have to see where this actually ends, but this strike, as they say, is costing them a lot of money. The strike just wrapped up its 4th week. The layoffs don't really change the amount Boeing stands to lose during the strike or the cash it needs to sustain itself during the labor shortage. Wall Street estimates Boeing is using about $1.5 billion a month while workers are out and production of the 737 MAX and 777 jets is halted. Boeing should be able to handle the strike. It had about $23 billion in total liquidity at the end of the 3rd quarter. Right, for the time being. Now they're losing $1.5 billion a month. This production of these 2 jets, planes are halted. And again, now they're under the microscope from Washington. And I don't know what to make of this with elections coming, meaning that right now it seems like Trump's the front runner. And if Trump gets elected, I'm not exactly sure which big negative or big positive route this can potentially take. which is why I think it needs some time. It needs at least 2-3 quarters, I think, to settle down, drop down big, and then you may start to see a resurgence and a big rebound and volume really come back into Boeing stock if Trump makes a positive announcement, right? Because Trump's the kind of guy, I don't know how to read him when it would come to this specific situation, because he may be very upset about the whistleblowers. All of a sudden, they're not in the picture anymore. Supposedly, there was like knowledge that they knew that they had these machinist issues and they just kind of like pushed it to the side and didn't care about it, right? So you like endangered people's safety potentially with knowledge of doing that. So now they might really drop the hammer on them. You know what I'm saying? So you can make the case that Trump, again, I know it's not directly in his control being president, but we know that, phone calls could be made and he may reach out and say, hey, listen, this is kind of screwed up. You got to go for the jugular here with Boeing, right? On the flip side, the company has they had 170,000 employees. Now we're losing 17K, but that would still be above 150,000 employees, and I believe the bulk of them are here in the States, right? So it's viewed as a brand name, older American business. And the fact that now we want to, quote, make America great again, that's why I'm saying you could potentially see that they can struggle for the next couple of quarters, and then all of a sudden, you have an announcement, oh, Trump, he loves the unions, he loves the workers, the machinists, Boeing's a brand name American company, so we're going to put it in order for more planes, or, we're going to make an investment, we're going to bring jobs back to Boeing, right? So you may hear that flip side of the coin argument as well, which of course would send Boeing stock absolutely exploding, probably in my opinion back up to like 300, 350 a share. So this is why, until of course we get a clearer picture of what can come out of this, we don't really know what can happen. But here in the immediate short term, in my opinion, I think it stays in that wedge and it continues to struggle over the next couple of quarters. And I do still kind of lean bearish here on Boeing. But I just wanted to, again, give my opinion on what could potentially be coming over the next several months if Trump wins the election, because you might kind of make the argument for, either a shit sandwich that Boeing's going to be biting into now over the next year or two, or a complete resurgence coming into the stock over the next year or two. So definitely something we can keep an eye on. But with the layoffs, 23 billion in liquidity. While the layoffs may come with or without a strike, the timing is a reminder that the dispute has gone on too long. The next difficult job for Ortberg is to find terms that union workers will accept, allowing the company to turn the page on what has been an incredibly difficult 24. Well, in all fairness, it sounds like they kind of did it to themselves, but I'm not trying to go too deep into the company. But through Friday trading, Boeing stock was down about 42% year to date, off 39% since the ball dropped, when an emergency door plug blew out of a 737 MAX 9 jet in mid-flight. Shares are down 7% since the strike began. Management and labor better get serious and soon. Okay. Decent article right there. We're laying off thousands, cutting 10% of the workforce. Yeah, you can see this is basically the main talk of the town here. It's finances. Boeing takes $5 billion in charges. Company exploring options to raise billions of dollars. I also saw an article speaking about their debt. And just bear with me here. Convertible bonds. Analysts estimate that Boeing would need to raise between $10 billion and $15 billion to maintain its ratings, which are now one notch above junk. That's the article I wanted to read. And, of course, I can't really find it. Okay, hold on. Bear with me here. Bear with me. The strike, which has entered its fourth week, is costing Boeing about $1 billion a month, right? That's according to the S&P Global ratings. I think this was it. Restoring Boeing, quote, requires tough decisions. Yes, we know this. Layoffs will include executives and managers, he said in the memo. Boeing said in its latest 10K that it had about 171,000 employees, mostly in the U.S. See what I mean? So that's why you can make kind of that Trump connection, and we could potentially see the big rebound coming in Boeing stock. But I don't know. It may really get worse before it gets better. The aerospace and defense company called for third quarter revenue. Here we go. That's this quarter coming up, by the way. You have about 2 weeks to earnings. I believe it's October 23rd. Third quarter revenue of 17.8 billion and a GAAP loss of 9.97 a share. Negative operating cash flow of 1.3 billion. It said it had 10.5 billion at the end of the quarter in cash. Yeah, it had it. Now it's probably down to like 7, right? The company compares with analysts' consensus for a loss of 161 a share and sales of 18.49 billion for the quarter. Boeing is slated to release its complete quarterly financial results on October 23rd. So we may miss by over $500 million and apparently report a wider than expected loss over the next 2 weeks, which is why, again, the stock can maybe toss traders a curveball. And that's why I mentioned initially you could see like a 10-point rally back to the middle of the wedge, potentially retest that moving average, right? And we can have the up before we go down and kind of just remain inside of that descending wedge over the next couple of months. Boeing also pushed back the delivery of its 777-9 commercial jet to 2026 and that of the 7778 freighter to 28, which will result in a pre-tax earnings charge of $2.6 billion. It also ended production, of one of its freighter jets. Shares of Boeing dropped. Yep. Decisive action, structural changes. S&P Global Ratings on Tuesday put Boeing's bonds under review for a possible downgrade, the third and final major credit rating agency to express concerns over Boeing's ability to make good on its debt. S&P, Moody's Ratings, and Fitch Ratings all have Boeing's bonds at the lowest rung of investment grade, meaning that a downgrade would put them at a speculative grade or, quote, junk bond rating. That would hamper Boeing's ability to borrow money at a time it is trying to turn itself around following a series of production missteps and the strike. It would also shut out the bonds from a much larger pool of investors, including pension funds, that can only own investment-grade debt. So this is why I'm saying we may have a serious downtrend or at least a quiet, flat stock over the next 6, 9, maybe even 12 months before we finally bottom out. And again, maybe we can get the ratings back up a little bit and kind of paint a more positive light around the business. And then we'll start to see the rebound and the climb up, which sounds like, based on my personal time frame, would be kind of like mid next year. So unless we get some big good news for Boeing, chances are, in my opinion, it will trend down for at least the next 7-8 months before we may have to come back, and maybe we'd be able to buy it at a nice discount or a nice fair value and just ride that wave back up as I laid out. The stock has not fared well, so a 42% this year, contrasting with the gains of around 22% for the S&P. Wild. Like I said, it just blows my mind because I know a lot of you, maybe younger, newer investors, I know with the stimulus money coming in and you're hearing about the big moves in the market. So maybe over the last 2, 3, 4 years, you decided to open an account. So again, I'm not trying to beat up anyone's mentality, but this might be the only market you know. And the one thing I will say is it is very rare where we had years where major indices were up 20, 25% for the year. That is massive growth. But, that's for another argument. But I wanted to bring up that article again, just because talking about the downgrade to the bonds, that is huge. That is huge. And this is why, again, if we kind of extend this out here, extend. So you'll see if we continue downward, first of all, if these earnings are already, kind of foreshadowing that we're going to miss these numbers, then we may actually have a flash break through down out of the wedge, and you may see a drop. I want to say maybe to about here, which is looking like 135, and maybe even the bottom of this range here. which is maybe like 128. So in my opinion, you can really chunk this stock down immediately. However, because they've beaten them up so much, it may have a run up going into earnings, and then we know they're going to miss, so they may continue dropping it downward and keep it at the bottom of the wedge. And if we come to the apex, if we do go all the way to the apex and stay inside this wedge, you can see we're looking at about the middle kind of end of March of next year, which is roughly 5 months from today, 5.5 months from today, which is why I was saying maybe in 6, 7, 8 months, if the news cycle kind of changes a little bit more to the positive and we start to get some good news coming on Boeing, then we may want to jump in either as a trade to catch the wedge pop or also as an investment to where we're buying a stock that can go back to 260, 300, and we're able to buy it down here for like 130 and change, right? That would be a nice call. But obviously we'll see how it plays out. But in my opinion, that's the prediction for Boeing. I think it stays down in this wedge over the next several months. And let's look at the numbers real quick. I just want to take a look here. We got 58 billion in debt. And yeah, we can see over the years they've been struggling, as you see on the EPS side, posting bigger than expected losses for 20, 21, and 22, and just coming slightly above what analysts expected for 23. Obviously, we're no longer getting a dividend. The revenue as well has been hit and miss, 2 beats, 2 misses over the last 4 years. We can see the debt jumped up from 28 to 65 billion about, dips down to 60, 58, 54. So we're slowly chipping away at it. And now as of last quarter, we had to jump back up. So you can see debt was down 52, 54, wow, even sub 50 billion. And now boom, back up to about 58 billion. Free cash flow minus 4.33 billion. This time last year, positive, almost 2.6 billion. They are holding 11 billion almost in cash on hand. But again, as we laid out, if they're losing $1 billion, $1.5 billion a month because of the strike and because of what they have to pay out now for halting the production of those two products, again, that can easily eat away at that cash. And within a quarter or two, all of a sudden, this could be down to like 3-4 billion. And it definitely, obviously, will look much less valuable, much less attractive at that price. But short-term assets outweighing liabilities, long-term liabilities outweighing assets by about 2 to 1. So we have 58 billion debt. We have about 11 billion in cash, let's say, for now, right? So that would bring us to negative 48 billion, we'll call it. Let's check the equity. Negative 18 billion. So now we're at negative 66 billion. You can see the book value has been dropping. It's now down to negative 29.20, which is the lowest it's been going back the last several quarters. What did we say? 66 billion? And for the year, they brought in 77, which brings us to positive 11, but it cost them 2, which brings us to about positive 9, in my opinion. The quote-unquote fair value of this business, again, I'm not looking at backlogs of anything that they have right now, but in all fairness, in my opinion, the official fair value of this business is at about 9, maybe $10 billion. And we can see the market cap right now, 93 billion, even after pulling back to the 150 level. So that's why this stock can easily take a hit. We can bring this back down 130, 120, no problem. Which is why, again, I'm saying you may have a flash break out of that wedge if earnings are as light as they're projecting, or also you can just potentially stay inside of that wedge for the next 4 or 5 months at least and just start to chip away at that value. And you can easily see that drop down to the 80s, if not the 70 billion range, before potentially bottoming out and trying to pop up and start to rebound. So that's what it looks like in the numbers. And let's go over to stock charts real quick. I'll let you go. Boeing, we can see RSI has essentially really kind of been flat over about the last month and a half, it looks like. We had the drop down to start September, and we've just been channeling downward, and the RSI is just seeing a couple of points bumps up and bumps down. Right now it's at 42.6 on the daily, which is why I was saying maybe a retracement back to that 20-day moving average, about 157, 158. You can see that's the top of the Bollinger Band as well. We're in a downward channel for about 6 weeks, so that's why I'm saying we can potentially break up and out in the short term, and then chances are continue to sell off. The MACD looked like it was about to cross, and then we had an update today, up 3%, but then we got news of the workforce layoff. So we have to see now if the stock immediately breaks down and gives this back Monday morning, or if we're going to continue and retest like we're potentially projecting. Let's switch over to the weekly. And my apologies for clearing my throat. I think, again, I mentioned the change in weather. I think I am fighting off a cold or something, a little flu. So just bear with me on that. RSI here on the weekly down to 35. So we are approaching that point where we could see a little bit of a bump into the 40s and 50s, and it could be viewed as oversold and we can buy it up. But again, I think it may only be maybe like 6, 7, 8 points, and then it should be short-lived and drop back down. MACD recently crossed to the downside on the weekly. You can see the stock's been sliding, just hugging the bottom Bollinger Band here over the last, looks like, yeah, like month and a half. So I think that if we do have the run up back to 158, you're going to see the MACD like curl and maybe get right to crossing, and then it can potentially reject the crossing and drop back down with the stock. So we'll see. Keep an eye on those technicals, though, in my opinion. That's what I'd personally be watching if I was looking to trade this. But could definitely go lower. Could definitely go lower. Let's check the pivot points real quick. I'll let you go. Pivot points on the weekly. We can see we have a bottom support level here of a touch over 143.5. So this is why I'm saying, again, we could have a little life here, gain a couple of dollars, and then sell off and stay in that wedge, and we could drop down. We could easily break sub 150, no problem, in my opinion. Look at the daily real quick. Also, you can see here in the mid 140s, we have a support level, 145.65. So that would be, and look at the next pivot point on the way up as well, 157.63. 157.27. Meeting up with the 20-day moving average, about 158 and change, right? So that's why I'm saying it may bounce to that 157, 158 range, and then technically it should reject again like it did here and drop back down. And as you see, if we're consistently stepping lower, making lower highs and lower lows, that technically is, you know, bearish momentum, and that's why these next support levels, 145 and change, 139.27, is definitely possible. And again, we said if we get to the apex roughly 5 months from today, you can see you're down here 134. Even if it breaks and holds near the bottom trend line, you can see 133, maybe 132. So those levels are very possible over the next couple of months for Boeing. But, you know, just wanted to do a quick review because I know that news hit, and also wanted to give a shout out. Let's see who was talking about it. Shout out to Deli, good old Deli Bob, because he actually spoke about another ETF that he was interested in, but he mentioned that one of the top holdings was Boeing, and he said that he would stay away from Boeing. So shout out to Deli Bob for that. That was back in August, brother. I don't know if you remember that. And also shout out to Godspeed back in the first week of May, basically saying that puts on Boeing seem ideal. It's just sketchy. They've been pumping Boeing. So this is what we mean, right? This is why we talk about these situations. And I mentioned that during those couple of months windows, that's when you were getting negativity and everyone was probably jumping in short-term puts. And what happened? The stock went up as opposed to down. And then probably when everyone's short-term puts expired and they said, screw Boeing, I'm never playing it again, that's when the break happened and you all happened to turn out to be correct. Right? So this is why I know it's very difficult, and this could be viewed as like hindsight trading. I understand that argument. But again, I have been saying for years, if you see the potential move taking place, you could see the writing on the wall and where it kind of quote unquote should be in the longer term, then if you do options, try to buy yourself time if you can. Time trumps strike price, in my opinion. So, you know, just wanted to reiterate that. But yeah, shout out to Deli and Godspeed. They were talking about it again several months back, and obviously they were on the right track and called it correctly, as even though we've had a bump and then a drop and then a big run up, you can see that the stock was at about 200 plus when we were talking about it, and now we fast forward and the stock is down to sub 150, indicating roughly a 25% sell-off since we spoke about it a couple of months back. So shout out to us. And yeah, that's pretty much it. And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel if you can. I really appreciate that. And of course, it really helps to kind of just expand the growth and the views on the videos and stuff. But moving forward, more importantly, like I always say, I understand that these markets are rocky, they're volatile, they are very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time and enjoy your weekend.